Hello everyone, welcome to the Monkey Stock Club. For those who are new at this channel, my name is Monkey B. I love to go out there looking for some nice stocks for you. So all you have to do is just watching this video and decide if the following stock, for example the Kirkland Lake Gold, could be something for your portfolio. So please feel free also to hit the subscribe button below to become part of the Monkey Stock Club family. So it really helps me to, let's say, increase also the community. I would really appreciate it. Please be aware that everything I say here is just my opinion, as I'm not an investment advisor and professional one. As you can see, I'm just a monkey. But nevertheless, I love to analyze stocks. So today I decided to use the high growth investing analysis. Here you can see all the key figures. We have three key figures: the EV related to the sales actual, the cross margin, the rule of 40 score, the sales growth, the debit ratio, and the PEG. So for every part or key figure you can get 0, 1, 2 or 3 points, and the highest score that can be achieved is in some 18, and this indicates an high grow investing stock. So I've chosen the Kirkland Lake Gold, very exciting stock. So they are engaged in mining, developing, and also exploration of gold properties, and they are located in Toronto, Canada. So the enterprise value is a measure of the value of a company regardless of its financing. So if you divided the enterprise value by sales, you get an important ratio for estimating an valuation of fast growing but still or sometimes loss-making technology companies. So we just use the market capitalization minus cash plus debit refer to or equal to the revenue, and we got 6.8 as an value, so 3 points, as we are below 8. So next KPI is the cross margin. So we've got 58%. We are below or higher than 50 and below 65, so we get just 1 point. So for the cross margin, you just need to get the sales minus the direct costs and ratio to the total sales. So what tells us the cross margin? It is a percentage of sales that remains for the company after deducting the direct production costs, as I mentioned, and the cross margin provides a good indicator of profitability of a business model. So the higher the percentage, the more money the company has available for sale, marketing, research, and other interesting things that could impact the strategy and also the success on the market. So next one, rule of 40 score. The rule of 40 score is a simple key figure for assessing the efficiency of a company growth and the quality of its business model. So here you can see the formula: sales growth rate last 12 months plus the free cash flow margin, also last 12 months. I just looked into the key figures on the internet. So the free cash flow around about 535 million. The sales growth compared to the last 12 months increased by 77%, plus the free cash flow margin 27%, as this is the ratio of the free cash flow related to the revenue. Overall, as a sum, 104.9%, huge amount, 3 points, as we are above 50%. So we got already 7 points after the first 3 key figures. The next one, sales growth, trailing 12 months. So as I mentioned before, we compares the sales of the last 12 months with the sales of the previous 12 months. 77%, 3 points as we are above 40. Quite nice. Still growing, strong growing for Kirkland Lake Gold. So the debit ratio is calculated by dividing the sum of the current and non-current liabilities by equity. So the last quarterly figures are used for this calculation, and the debit of the last quarter was 28 million US dollar, and the equity of the last quarterly was 4.7 billion US dollar. So quite a small debit ratio of 0.01. So that's great. 3 points as we are far below 0.5. So the last one, the PEG, price earnings related to the profit growth, or price per earnings, as I mentioned. So and in general, the definition or the meaning, the PEG is one of the most important key figure for the assessment of already profitable growth stocks. So it calculates the ratio of PE and profit growth. So and if this ratio is between 0 and 1, this indicates an undervaluation. So as Peter Lynch already mentioned, if you have the PE and the profit growth equal, then it's a very nice stock to invest for, as this is an indication for undervaluation. And under these circumstances, the PE 16.7 and the profit growth TTM around about 50%. So we will get further 3 points as we are between 0 and 1. So that's great. Here you can see also the last 3 years sales growth. So still or in every year and very nice sales growth. 2017 80%, 22 50%, and currently TMT 77%. So a highly growth stock. And here the EPS 2020 $3.4 US and the EPS 2021, so the earnings per shares, the estimation 4.48. So we have an profit growth increase in the estimation for the next year of 31%, multiply with 4.4 EPS. So we got a fair value by Peter Lynch of 142. So we have a great gap, a big gap. So 200%, really nice. Could be a nice opportunity for us to invest in the Kirkland Lake Gold. So hopefully you enjoyed the video. Maybe it also helps you to decide if you would like to go for Kirkland Lake Gold. If you like this video, please feel free to hit the subscribe button below. Really helps me to increase the community here and to keep on doing nice videos for you. So then, have a nice day. Bye bye.